Hey everyone, just testing out some stuff. Gonna put. Let me know if you're hearing me just fine. We'll let the room fill up a little bit. We'll get going here in about 8-10 minutes. Awesome. We're gonna put some music on to listen to. So let me know if you're hearing this. Hearing the music. Just wait, it's gonna go from elevator to some serious stuff. Awesome, man. I'll let you guys listen, watch the E-minis trade while we're getting ready. Thanks, Christopher. Appreciate it, man. Some of my favorite German music for my German folks out there. Oh, you'll see. You're not going to fall asleep. Trust me. All right, final song. We're starting to fill the room up now, so we'll get going here in just a minute. Futures are actually trading down 27 handles right now on the E-minis. A lot to go through today, folks.
Du bist die Waffe, ich die Munition. Du bist der Richter, ich dein Henker. Du bist das Beben und ich bin der Vulkan. Bist meine Stimme, die niemals schläft. Du bist das Dynamit, ich die Explosion. Du bist das Feuer, ich die Asche. Du bist die Sonne und ich bin das Licht. Nur wir beide sind, was wirklich zählt. Für immer, nur wir zwei. Für immer, alles andere ist total allein. Du bist das Herz, ich bin das Blut. Du bist die Nacht, ich bin dein Tag. Du bist das Schwert und ich bin dein Vollstrecker. Nur wir beide sind, was wirklich zählt. Für immer, nur wir zwei. Für immer, alles andere ist total allein.
Okay, folks, we are live here. I've cranked the music down. Thanks for coming today. We've got a couple hundred folks here. Hopefully we'll get up to 1,000 or more. And kill the music. Hope you guys enjoyed some of the my German. I'm a connoisseur of German industrial metal for sure. Anyway, lot going on. I went through 2 videos ago. I went through a couple of key elements there, and this RXT cell signal is a killer cell signal. And I went through the ones that we had on a weekly basis and what they set up, going back all the way back in, primarily into, and I'll go through a couple of these items today, but we've definitely seen these cell signals come through. This is a similar one that we had in the beginning of September. And the way the markets are acting today, it's starting to feel very similar. We're trading down close to the lows of the day here. We're at 375, 350, the low 2 even. Looks like they're going to print them down into the lows. Listen, I've been saying this on the channel for weeks and weeks and weeks. There's not going to be a stimulus deal. That's not happening. We're going to go into the election. Who knows what we're going to be dealing with around all that stuff going on. But the uncertainty is going to start to flow out of here. And I still don't think we're going to see a major collapse, but we are going to see, and I'll go through the details here in a few minutes. We are going to see this absolutely, this ABC down looks like it's starting to form. Now, a number that I put out in the last 2 videos that I want you folks to pay attention to is the 34.99. That was the low. We gapped higher on Monday. We are now well below that low, and we closed there today. That's going to confirm that RXT high, and it's also going to start that first wave down, which we're likely to go 30. Maybe 34.40. I'll break all this down here in a minute, but this is exactly the setup that was going to happen. And the big squeeze job, the world that we live in, you get all these big players out there. SoftBank's got they've become a big player in manipulating anything from options to futures. Who knows what some of these big players are doing? But hey, it's all legal. We're all in the same game, so we've got to deal with what's going on. As far as I can see, the analytics that I supply to you folks on this channel, to me, are working just fine. And there's not any real, I don't know what's the best way to put it. There's no aberrations or anything going on from what appears to be normal within the context of how I see the markets. And so Let's go ahead and let's take a look at a couple charts here and start to look at exactly what's going on. And we'll get through all the stocks and everything here shortly. Let me bring up, let's go to the E-minis to start with. And this is the daily. We're getting close. We're getting down to the S3 number, 72 low. S3 is 65. So we've traded through the S2 at the moment. And this configuration. So I'm going to draw in some things that we can take a look at and get a feel for. Hang on one second, please. Yeah, we will get into the stock. So I'm going to spend, typically what I do is 30 to a half minute. I'm going to cover a lot of markets that I want to go in through. As you folks that watch this channel know, this is the opportunity for me to go in depth and do a lot of studies. This is me just doing live analysis on the markets as we go through, and I get to make a lot of notes on for myself that is actually going to most likely dominate what I'm going to be thinking for the next several days, and kind of an extension of what I've already been doing. And so that's it. More, everybody there's nobody's showing up yet. We only have about 308 people. You guys need to tell your friends, get them on here. Yeah, so as we look at the daily charts, I'm going to draw in this pattern that I've been talking about. Let's take a look at the patterns first. Let's set this thing up for exactly what it looks like we're going to be doing. So this is the pattern we've been talking about for a while. Everything in threes, A, B, C down. Now we'll call it A, B, C up. Now we're going to get A, B, C down again. And I believe we're going to stay in this range that I'm drawing in here. This is what I've been setting up for a while, is that we're just going to be in this broad trading range. And I'll actually bring up the WaveTech database here shortly, as it is unable to get above that 42% traction that I've been talking about. So that's just confirming everything that is going on here. So this is the expectation. Well, we got the RXT sell that came in. I'll take some of these arrows off in a minute. Got the RXT sell came in 2 days ago, closed down yesterday, opened higher, and moved down. And I think, and just talking, I saw some comments. A lot of folks were leaning against this thing using the SQs, and we did do our live training that we did yesterday for the WaveTech, and there was a little bit of market chatter that went on there, but I try to keep it to the software so we don't distract from what we're doing. But the bottom line is this RXT sells. These things are deadly. This is the one we had over in September. That was literally the day before the collapse in September, and that led to this ABC down. So let's go to the next. Let me take a couple arrows off here, and let's talk about what's likely. In this configuration here, as we come off this top and we start to form this A wave, most likely we'll head toward this. We're definitely heading to the 10-day moving average. Right now it shows the value 33.27. We're still on the futures here. That number is popping about 18 handles a day. So 33.40, 43 is a number I recall that I talked about a couple weeks ago. So that is that pattern is what appears will be the next. So what I've drawn in here, we should trade down into these moving averages, and I'll bring up some Fibonacci ratios as well that we're likely to see. But this pattern should be probably one of the easier patterns to call. We'll see. Now that I said that, I'm going to get in trouble. But we should go down into these average. We should get a right shoulder, and then we should get another move down. And this move down here is going to be significant, and that could be where the big money is. And that's going to set up, if you think about it, what's the date here today? The 14th. We are literally 3 weeks out, a little less than 3 weeks out from the election. So things are going to get pretty intense, and not just here in the U.S., on the planet, without a doubt. This is going to be a very intense moment in time in history, I believe. And we're the way that I'm seeing this situation here is that this is going to be one of the more significant events, and we're going to find out a lot about maybe the next 10 years off of this election and what's going to happen. So we'll see what happens here. And I'm just going to make a statement. You just need to know. You need to know. You're not going to see solar panels everywhere if Biden wins. Okay, that's not what's going to happen. The world's not going to turn magical and green. But what we are going to see is a lot of rethoughts of the election, whether Trump wins, whether Biden wins. This thing is going to be intense, and everybody is going to have to rethink everything. And I remember, in 2016 when it was announced that Trump was winning, the Dow Jones was down 864. And I forget what the futures were down. It was a huge number on the E-minis. And I thought, man, you should buy these things. And I didn't, and they snapped back. You know the rest of that story. But this is going to be the point of this is not anything political. It's that this is going to be a major event. Now, I've been around the planet for 68 years, and every presidential election since I was old enough to actually understand them has been told to me that this is the most significant one. This one probably is. Maybe because of the pandemic, because of everything that the world is going through right now. There's definitely a huge shift. We all feel it. So, but listen, I'm not making any statements about anything other than it's a big event, okay? And so what's setting up here, though, is classic, in my opinion. So I do something that I've talked to people that have known me for a long time. I call it reverse fundamentals. So I look at the charts. I just showed you, I'm expecting this ABC down. So if that's going to happen, what is likely to happen? What is the fundamental backdrop that's going to happen? Well, it's simple. Everybody's probably going to take some profits. They're going to take some chips off the table here. I've been talking about this for a number of weeks, that do you really want to have a big bet coming into the election? And at what point of whatever this last little rally has been, at what point do you unwind these trades? That's what we're going to see, is this unwinding of trades. And the prospects of any kind of political solution from a standpoint of stimulus is not going to happen, like I've been saying. And I think it will happen. I think there will be an airline deal. There will be all kinds of things happen. And matter of fact, probably COVID will be over like the day after election. It'll all be over. Everybody will be fine. So we're going to live after all. And so I just hope we do get it together, because I want to have a giant party in Arizona next year with everybody. We'll even do a golf tournament. We'll have a whole bunch of fun. I want to do that because I love this community. I really do. You guys are awesome, and we've done a lot together. And this has been a 5.5, 6 month journey for me since I've been in the public eye a bit here. So this has been a lot of fun. So let's go into something I want to talk about. Let's go into maybe a little longer term view of what's going on and start to break in to the next level. Like we're going to go into the weekly charts, and then we're going to go to monthly. So I'm going to go off screen so we can go full on this thing. Yeah, I'm not. Yeah, somebody said COVID is real. I'm not saying it's not real. I'm just saying it's it will be over. All right, so let's go. On this chart here, what I want to start to look at here is to start to break into, and I may have to go to the Dow Jones. I'm still having issues getting longer term data on the. Yeah, so hey, James, Goldman Sachs, these guys haven't been right for so long. They're going to 3,800 by when? I just saw this comment here. It's already moved off the screen on me, so I missed it. I forget what it was. But anyway, yeah. Yeah, I would never, I would, anyway. Yeah, so let's take a look at the weekly. I've talked a lot about this pattern, and I believe that we're going to see something really interesting over the next 6 to 8 weeks. Now, I don't know what the outcome of the election is, but this pattern I just drew in on the dailies. Let's go to the next level and let's draw it in on what it looks like on this level. And I'm trying to figure out, there's a function that I used to be able to pull this chart around, and I can't. I'm going to try to change some scaling, so bear with me, okay? Because this will be worth watching. So this is the big dilemma that I've been having for a while. It looks like right now, if you look at the longer term viewpoint of the markets, you could argue that everything is in threes since we started the decline. There wasn't, when we look at a weekly graph, and I'm still on the futures here. In fact, I'm actually going to X out of here, and I'm going to go over. I actually want to use the cash here. So let me redraw this. Sorry for that. So I'll probably go a little bit into the MSM mode, which is mad scientist mode. But this pattern here, we could argue is probably a 1, 2, 3. Boy, I did a terrible job at that. Let me try that again. So this is a 3 wave, and everything seems to be in threes. So we've got a 3 wave down over here. We've got 3 waves up, and now we didn't make a new high, but this is possibly, this has been the big dilemma, and the thing that I've continued to question. This is I guess the answer that I need on this is, what is this? If this is all 3 waves, I've been an Elliott wave guy since 1983, okay? And if this is what we're looking at here, then this is a corrective wave. This is not an impulse wave up. And if that's the case, then we could get some really not so fun things. And we're going to go to the monthly graph next, and we'll probably, like I said, I'll probably have to use the Dow Jones. It's got a slightly different, I hate doing that. I'm going to try to get this long-term data again. And I only think about calling TradeStation to find out what the heck is going on, and until they're closed and no one's around on their support team. So, but this whole thing is set up as 3 waves, okay? Now what we're seeing is maybe a double top, but we're probably going to see a move. This is the expectation right now, where I just drew that last arrow down, is back down somewhere toward, in this grid, down toward 30, maybe 3295, 3300, maybe a retest of that 3200 low. I don't think we extend this down below here, but it's certainly possible. The thing that's going to be support line here is the 40-week moving average, is way down here at 3117. That number's moving up every week. So as we go through the next several weeks, get closer to the election, if we do see any sort of decline, this is most likely where it's going to hold. And I'm going to go to a monthly graph next, and just so you can see these patterns here. All right, let me. Yeah, I don't think somebody said it's not a diagonal fifth. I don't know. It could be, but I don't think so. I don't think that's what we're doing here. It could be. And if it is, then that's, as you would know, that would be devastating. So that would mean the end of the end, and maybe that, but I don't see the diagonal fifth. And one of the things that drives me, as you folks know, is the database. So I keep telling you folks, and you keep watching, is that I am unique in that I don't just draw trend lines on charts. We have I have 16,500 symbols, ETFs, mutual funds, stocks, bonds, everything that we watch on a quant basis. And these are the numbers that I talk about out of our database every day. And we've been using this database for a long, long time. And there's $250 billion have run through this database in real money being run. So this is something that, this is not, I'm not some guy that started trading the markets 3 years ago and have never traded and never managed money, never done any of these things. That's not me. So we're trying to bring this to this community here so you have a bigger insight, and then ultimately have the tools which to deal with this stuff, because the markets are changing substantially, I think, from the standpoint, the complexity as well as the participants. We've got a lot of new folks in here. So we're going to go to the next chart. So I'll go to that. It's a really good comment that somebody brought up, that, talking about the diagonal fifth. Don't think so, but we'll go to the next level. Let me just see if I can get the time frame and see if this does. Yeah, it keeps doing this. I can go through some of this. I don't know why it's doing this. Let me try to set this back. See, it won't let me go back. Like, I should be able to go back 60 years. It doesn't let me go back. I'm not sure what's going on. So it will let me go back, I believe, on the Dow Jones. It's a similar pattern, especially when we go back further. Wow, is nothing letting me go back? This is really interesting. I can't. It won't even let me go back on the Dow Jones. This is a bummer. I don't know what's going on. So they're definitely getting a call for me when I'm done today here. Okay. Yeah, so but let's just go here, since I can't get back on this data. Let me look at one more setting. I have no idea what's going on. Try to trick it. Nope. Yeah, it won't let me go back beyond 18. I have no idea. Anyway, all right, so let's go. As we look at this pattern setting up, the diagonal, see, I can't show you the diagonal fifth. I can't go through this. I don't have enough data to actually show you exactly what's going on. This is bad. All right, this is letting me get back a little further here now on the composite for some reason. That's okay. I'll take what I can get. It's all got a similar pattern. Let me just see how far back this will let me go. All right, this will get me. This will get me there. I don't know why these other symbols won't let me go back in data. So bear with me. So this pattern that is unfolding, if we go back to this is most likely is a fifth wave, but most likely the scary part about this is this is probably more of a wave two of this move, and we're in a composite. So I'm sorry. This is just really frustrating to me. I'm going to try to go, yeah. That's the only symbol that let me go back. That's very, very interesting. I absolutely apologize for TradeStation not working. Not a good advertisement for them today. But anyway, yeah, the composites just got a whole different look. This is not going to work. So I'm sorry, folks. Well, I walked myself into, I painted myself in a corner because of this data issue. So let's go ahead and yeah, I would go to TradingView, but I don't use it, so I don't, this has never happened before, Christoph. This just started happening the other day. All of a sudden, I can't go back in data on the S&P. So that's, and it did let me go back on the Dow Jones at least anyway, so I apologize, folks. Yeah, yeah, trust me, TradeStation's good. There's something going on with the data. I don't know what's going on. I'll find out. Apologize. So let's go ahead and let's dig into some of these other markets. But the point of everything that I'm saying is we are in this broad trading range that I believe is going to be a substantial consolidation range, and there's a lot more numbers higher. And think about what's happened here. So let's just go into some little philosophical stuff here. What's happened is the Fed has pumped in all kinds of money. Everybody's, likes to talk about a bubble and all of that stuff. Bubbles are great. The good news is they're usually reasonably easy to find when you when they happen. You get these big reversal patterns and things that happen. That I don't see us in a bubble, but I do see us is in the potential for a massive move to the upside because of the money that's been pumped in, and it's just there's so much energy behind the markets yet. And we also have an economy that was shut down, and it will be back online, whether it's 21, 22, or whatever. These expectations are going to continue to be built into the markets as we go forward. There's just going to be part of reality, and as long as people don't believe the rally, the further it will go. And I know in the last live stream that I did, I talked about some of the good things that can come out of having cash, and I know Ray Dalio has said that trash is cash. Trash isn't cash. Trash is cash if that's what you have, yes. But if you're using it as a way to change your beta and your risk, then it is much, much different. It is something that can change your exposure, change your beta to your portfolio. We have used cash for over 30 years for how to balance risk. So just getting out can do amazing. You can't lose money when you're out, and it's not about being in cash for 10 years. In that case, I would agree with trash is cash, but it's about strategically moving the cash and changing exposure in the markets as you go forward. And in the weeks to come, you're going to start hearing more about one of the strategies that we run on a more sophisticated level called multivariate trading, and doing what we call dynamic direct indexing. And when you can do that, you start to really do some magical things with money and how to make money actually expand. And I'm trying to figure this out and how to get these type of strategies out to a fractional share environment so everybody can get to them, is that they're crazy in what they're capable of doing. And so anyway, but so composite's not going to help us here. We'll go back to the weekly chart here. And what I want to look at, and it was interesting that we're seeing some of this stuff. Bear with me 1 second, folks. Hang on 1 second. No, I did not go to the bathroom. Here, I'm having issues with the platform right now. I took you guys off screen just so that I can try to fix this, so you don't have to watch me try to fix what's going on here. Okay, I'm back. Yeah, I'm sorry, folks. I don't have any idea what goes on. This is a pretty static environment that I built here, but something's going on with a number of things right now. And I've had a live stream a while back that we had to do a reboot. About, I don't know, it was a month ago or so, Windows did an update, and nothing's worked right since on TradeStation. And yeah. I'm not sure what's going on, but anyway, I think I'm back here. So let's do this. Let's take a look at the 10-year. What's frustrating? Yeah. Anyway, so we're back at 722 on this 10-year, and I think it's important. I want to talk about interest rates. We're going to do the dollar. We'll do gold, and I'll touch on silver, and then we're just going to start going into some stocks and some other things that we normally go into. All right. Yeah, so as we look at this at the 10-year, we spiked up the other day. We went all the way to almost 0.8, and now we've moved back down into the pattern. This is the daily, but I want to look at the weekly and monthly because this is going to be significant. Now the 40-week moving average is at 8.3. The ppm is down 3.19. That's going to be your major resistance. So interest rates are likely to stay between 0.67 and 0.83. We're just going to continue in this sideways range. But I think as we go to the monthly, if these will work, hopefully, we'll see. Yeah, they work. The 10-month moving average is resistance. This thing is setting up, and for whatever reason, it looks to me that we are probably within maybe 3 months, maybe as many as 5 months for rates to start to go well above 1% on the 10-year. And I believe, yeah, I'll bring up the yield curve because this is also something that I think is important to understand what's going on in the structure of the markets right now. And if that's the case, I've been going on and on for 3 months. You guys have been watching the channel about this rotation where the small cap and mid caps are going to start to lead and even outpace the NASDAQ, the almighty NASDAQ. And that is going to be driven by this move in the treasuries. Now, I've talked a lot about this in the last several videos and starting to get you folks to connect what's going on with interest rates and with the small cap stocks. And I think what's happening here is we're seeing some liquidation of treasuries, and that money's got to go somewhere. And you have to realize that the treasury market is so huge that a little bit of cash flow out is, if it's looking for a home, it's going to try to find a couple things that are cheap and things that haven't moved yet. No one wants to buy, the apples. I mean, they're going to buy those because they have to in a portfolio, but they're not going to look for new ideas. That's not where the cash flow is going to go. And I've been saying this for a while, is for the markets to actually get moving beyond what they've done so far and what I was hoping to show you in the longer term analysis, which is still a multi-year rally is still very likely after this large consolidation. And a consolidation I'm talking about here, I will have this fixed by the next time, and maybe I'll get it fixed and maybe cover it in a nightly video, because it's been frustrating to me. Because what I wanted to show you is what the longer term patterns look like from the standpoint of what's evolving out there. And the last time I've seen some things like this was back in 1994. I remember telling somebody in 94, so you aren't going to even believe what's going to happen in the next 6 to 8 years. And if you go back to the market, normally I could go back and show you, but it was just this monster rally, and there was a big expansion of things. And those of you know, like I'm very interested in some of the things that Kathy Wood has been saying out there, and I agree with her on a lot. Is that what happens when you get into times right now? We have entered into a time of innovation, and there's going to be a lot of new ideas. There's going to be a lot of new efficiencies come into the economy. And that's what happens when we get into these type of situations on the planet, when you look at what happens in these downtimes. And I totally agree. And the whole deflation inflation scenario has a lot to do with innovation, because what we've seen over the last, why can't the Fed get inflation? Because there's so much innovation going on that there's efficiencies coming in. Think about the stock market that we're talking about today. We've got fractional shares. We have zero trading costs. Yeah, people are making money trading off the order flow, but they always have. I'm an ex-market maker. We always made money off the order flow. That's how it works. That's okay. That's always been a known. That goes back to the first trade on the street. You can go back. I believe the first stock exchange was in around 1600, and that was the East India. Why am I spacing out the name? But anyway, this thing goes back. It's the same way everybody's always made money, every broker dealer, off of that order flow. So as we look at what's going on, we're seeing a world that wants to go to zero. The world wants to be at zero, and everything wants to be free or appear to be free, and that there's something going on in the background that is driving this mentality, and that's what we're seeing in the in this action. And everybody thinks Robin Hood was great. Robin Hood, you know, they just figured out how to just make money off selling order flow. That's all. They didn't do anything brilliant. They just made it look like they were brilliant because they took out the extra fee that the broker dealers were getting away with forever. They go, hey, we can make money doing this, being an arbitrage model, and that's all they really are, and that's what they have been forever when they started. But that's always been going on. The brokers always found a way to add an extra ticket fee, transaction fee. There used to be mailing fees. They had fees on top of fees on top of fees. But the basic transactions and the order flow has always been where money's been made. But the reality is now we have the zero. So everything's trying to get to zero, the efficiency of the economy. And so what happens is where's the innovation going to come? We're probably going to see not every new idea, every IPO has to be a unicorn, right? There's going to be a lot of innovation, small companies, different things. FinTech is on fire right now. And, those are the things that are, from innovation and new companies and startups and all that. And, so, that is really what things are all about right now. Yeah, so I'm frustrated because one of the things that happened on my screen, I can't actually, well, here we can go. I can't see the last price on the screen anymore like I usually can. So it's very frustrating. But the 10-year is going to go up in value because it's going to go down in value, and yields are going to go up because they're going to sell them, and that money's going to go somewhere. That's what I'm trying to say here. And when that happens, our job as investors and traders is to figure out where it's going. And I still am convinced it's going to go over to these other areas. And if I just bring up this, let me get off screen. I just bring up this spread here. It's still in this basing pattern, but this is where this trade lies, being long the Russell and short the NASDAQ. I've been talking about this for a while. This is where the money's going to be, where the money's going to be made, or at least where the trade is going to be identified. And when that happens, when this spread breaks out of this basing range it's in, this is going to be a real deal, and this will be what leads the market higher down the road. So, yeah. So, okay. I think I went far enough down that trail to bring up the point of what I've been trying to say here. Let's move on. Let's go to U.S. dollar. Okay, that's good. This one actually works on a monthly basis. My luck is probably just something simple with TradeStation that they changed some setting. I have to sign up for something. I don't know. It just happened. It just happened recently that this went on. So anyway, but if we look at the dollar here, and this is the monthly chart of the dollar. And as much as people have been talking about it declining, the dollar is, let me draw up a couple of things here. The folks talk all the time about, I'm just going to draw in this broad range here. I mean, this goes back to 2014. All right. Dollar's been in this trading band for a while. It's been very stable. It's a lot closer to the bottom end of the range than it is the top. And, it looks to me that it's going to remain in this range and probably, end up moving back above 100. And the PPMs down below here, they are starting to, these are all bottoming formations. This is what it looks like when the market's bottoming. And I've been talking about the dollar bottoming for what, 4, 6, maybe 8 weeks now, a couple months. And this is exactly what's been going on, is that the dollar is setting up this pattern where we're going to see it ultimately move well above, when I'll go to the daily in a minute, we're going to see it move back to 200 week and the 200 day moving average. Interesting enough, they're somewhat similar in value, but we're going to see that to start, and then that will lead us to somewhere else. And if this scenario I just pointed out, that I just talked about in the 10-year and interest rates, could go, like the 10-year could go as high as maybe 1.4, and if that happens, chances are the dollar is going to do very well in that scenario. And for whatever reason, the dollar is going to be king, and it's going to stay king. There's no reserve, replacement for the dollar. The dollar is going to continue to be the reserve currency. It doesn't, a lot of folks talking, but they've been talking about it damn near since I got in the markets 40 years ago. I've been hearing this, and it hasn't happened yet. I don't see the signs that it's going to. And what's the alternative? So there's so many, especially with the Fed printing money like crazy. The monetary base has virtually tripled. So there's way more dollars out there. And I haven't mentioned this for a while, but the if you haven't watched, Princess of the Yen, watch that movie and think about the United States right now and relate it to maybe the early 1980s in Japan. And what happened is they expanded the monetary base substantially, and that fueled an unbelievable growth and prices. I don't know if we can get the kind of inflation in numbers. I don't know if it's an exact scenario or not, but what it does tell us is that the S&P is at 3,400. It could double, triple from here because of that. And that's not going to happen overnight, but this is over the next, 10 years. Hopefully I'm still viable and I'm still on these live streams doing this stuff. I'm not sure I want to do that long, but you understand what I'm saying. It appears to me that this is a phenomenon that is going to continue to unfold in spite of, the way the world's structured. It's still going to remain that structure. When the British owned the planet, they just kind of lost control. If that would have happened now, they would have had an easier way to keep track of what was going on in these remote places. Nothing's remote anymore, right? You can zoom in on a video camera just about from anywhere right now with all the satellites. So, but I'm getting a little too deep on this, but the point is that the dollar is in this broad trading range. It's very stable, actually. We have times where it's declining, but right now it to me it looks like we had a monthly reversal pattern in September. That should follow through. We should start to see 95, 96 on this. That should coincide with higher yields on the 10-year. And one thing I didn't do, and I said I was going to do, was bring up the yield curve. So I'm going to go back just for a minute, and I'll bring up the yield curve here, because I think there's something important to be talked about here as well. Is that the yield curve is, especially on the 1030, it's coming back in. We're up at the highest range that we've been since May. This spike that you see right here where my cursor is, that was when the Fed came in and changed the game. We saw this thing just imploding. Here is March 9th, right at the bottom of this. This is where the Fed came in, liquefied the system, made it obvious they were going to buy anything and everything they could, and it changed the yield curve. And this has been why I have had also the argument that the Fed is not going to allow any negative rates in this country. It's not going to happen. And this is where they concentrate their effort in on the yield curve, especially in the long end, the 1030s. That is definitely a place where they look. And you can even see the activity on the 510s are steepening as well. So this is substantial. Now I spent about 5 years working with banks and institutions, primarily trading the yield curve, trading these spreads. And I've been a big spread trader over the years, and this is why when I point out the Russell versus the Nasdaq, that I know spread charts on how they look, and when you're seeing this shift in the markets, and these shifts happen very incrementally. So it's like watching paint dry or something, right? You can't really you have to understand that there's a structural change happening, and we are seeing a structural change, and whether they can ultimately get it to do what I'm talking about here or not is an absolute different situation. But they're trying on the yield curve. They're flat out manipulating the yield curve. They want this thing to stay steep. It dipped down in around August, and they boosted it up. And it's best actually right now. There's certain people around the financial markets you don't want to hear talk, and Chairman Powell is one of them. Nothing good can come out of his mouth right now because he's lost a lot. They've lost a lot of credibility. All they need to do is run their open market operations, which are happening all the time, and that is causing the steepness, the support in the Dow. They're going to support the Dow. They don't really want it to go down. If they can, think about this, if they can support the value of the Dow where it is now, let's say it got down to 92, let's just put 90 as the bottom line. If they can support it at 90 and they pump all these dollars in, and the value of the Dow doesn't decline and it stays, that brings the purchasing power of those dollars to look for something to spend money on. And that is the Japan scenario, say 1983 through 89. And that was a true bubble, actually. That was one of my more famous moments in time in my past of calling a top on the Japanese market. But we're not anywhere near that right now. We're at the beginning of something that is probably going to take us there, but we're not near it. That's my opinion. And I will take the other side of the trade with Mr. Dalio and people talking about the greatest depression. And no, that's not happening. Okay, this thing will be engineered. They will spend. They will do whatever they have to do to maintain it. If they have to, they will give us all money. That's the bottom line. They're going to engineer this thing. So we're going to see. That's why I'm talking about in the beginning. If you're watching the beginning of the show, I was talking about literally taking the, this election, this point in time. Forget the election. This point in time is a major shift in the world. And I've been on this planet for almost 70 years, and I've seen some interesting times. I can tell you, in 1980, it was an amazing shift what happened, going from 60% tax rates to Ronald Reagan dropping the tax rates down. And that was the beginning, really, of the bull market that we're in today. The Dow Jones, I started in 1979 on the floor of the Chicago Board of Trade, and the Dow Jones was trading at 600. Okay. And it looked like the end of the world. It looked like death. Shortly after I started in the markets, we saw, gold and all the crazy stuff that happened, and interest rates go to 17% because Paul Volcker was willing to raise interest rates in the middle of a recession. Who the hell does that? He did. And he was more interested in crushing inflation at the time, because you could go back, and I think in 1974 or 5, and you will see that the I think Time Magazine or one of those, we're talking about this crazy inflation, and we had price controls. They were so afraid of inflation that they froze prices, I think, for 3 months or 4 months. I remember a buddy of mine owned a record store, and he couldn't raise any prices. They had froze prices of virtually everything. So, you know, anything's possible. They will do anything. When you have legislature and government, we've already seen what they've done, locking us all in our houses. They will do whatever it takes to survive. So enough of that. But these spreads, what's going on with the Fed, this is what they're doing. They're showing you. It's not hidden. They're showing you. So dollars stay stable to move up. You're seeing the yield curve moving up. You're ultimately going to see the 10-year and especially the 30-year move up substantially in yields over the next. Now, this time zone I'm talking about is probably a 12 to 18 month time zone. This takes us into 22, probably, what I'm talking about here. But this is the big backdrop, big picture. I was hoping to show on some of the data, especially using the S&P, to show you how this all plays out today. And, you know, but this is exactly what's going on here. And in just a few minutes, I'll finish this little rant I'm on, and we'll start to dig into, we'll start to dig in. We'll do stocks. We'll do all the stuff you guys want to do. And like, as always, I'll bring you into that. Yeah. And, you know, we'll go through gold and all kinds of stuff here in a few minutes. But yeah, so you guys get the picture, right? This is, you know, it's just what governments do. It's what these entities that have been growing to this monster out there, and they're going to survive. You know, an old buddy of mine used to say, just know that, you know, these big companies, they're going to survive. They'll do whatever. They'll lay off everybody. They'll change everything. They don't care. It's the entity that wants to survive. You know, the corporation is the bad guy. The government, all these things, they will survive, and they'll do whatever they have to do. And this is interesting. I got into this rant today because this is the structure. They're showing you everything. You know, there's nothing hidden. It's all in front of you. It's just a matter, can you see it? And what are we going to do about it? So all the way back, I'll close this down, then we'll go on and we'll start to look at some stocks. Is that what we're really going to see going forward? I would say for at least another 3 or 4 months, monster broad sideways trading range on the stock market, and ultimately going higher. I don't know who the president is. We'll find out. But and I've seen comments, it doesn't matter who wins. Maybe it doesn't. I don't know. Maybe it doesn't. And it has, maybe everything I talked about today is maybe why it doesn't matter, because of the structure of the financial system and things are going on. You know, people, I'm just going to call Ray Dalio out again. Start talking about 1930 and I'm a historian. That's just bullshit. Okay. That's just bullshit. Because what that is trying to draw, that's trading in a rear view mirror. What it really, there's nothing about today that's anything like the 1930s. Nothing. Not the digital structure of the market, not the ability to move money instantly. I can send any of you, I know you guys are all going to want me to send you money now. I can send anybody money right now, instantly. You couldn't do that in 1929. You couldn't restructure the economy. You couldn't do the things you do. So we're not in 1929. And I'll close this with this little segment here, is that I got to speak at the International Convention for Chamber of Commerce, Mexico City, 1987. A young guy, that I got to do a speech in front of this large presentation in Mexico City. And it was right after the 87 crash. And I started off my speech as I checked my calendar. It is not 1929. It is truly 1987. And let me tell you why the end of the economies in the world isn't going to collapse, and it didn't. And it was because of the structure of at that time. And I'm telling you right now, we have a new structure, and these guys with all the new tools uh, that are out there, and the way that they can move and restructure things instantly, not in 3 weeks, not 3 months. Today, instantly, the Fed can, and they showed that. This spike on this chart tells you that. Okay, that spike on May 9th, that was them instantly changing the markets. And so anyway, I'm done with my rant. You guys have watched this channel for a while. You know I get on these things. But like I'm saying, just to close it down, they're showing you everything they're doing, and a major collapse is part of it. Major depression is not part of it. We'll see what happens. Uh, Trust me, I don't want to be wrong. I've always been an optimist, but this seems pretty good. Yeah, and Christoph, I agree. Dalio is just he's just, yeah. He should have stayed behind the scenes. I've told you folks this before. I had a friend of mine who used to work for Ray, and I've always respected his work. But man, anyway, it's getting hard to do it. All right, so let's do this. Let's go ahead and start digging in. So I know you guys are going to load me up. Give me, let's go in and let's start to get a list of stocks that you folks want me to go through, and I'll start hammering through all this list. We've got 1:30. We've got about an hour and a half to go on the live stream, so we'll just start digging into the stocks. So go for it. All right, yeah. All right, 30 more seconds, and you guys have to stop because you're loading them up. Okay. Thanks, Sam, the man. Appreciate it, man. All right. Yeah, you guys, man, you folks are crazy. Okay, no more symbols for a minute. I'm going to try to dig through some of these and see what we come up with. Okay. Yeah, so we're still holding the lows. Looks like they're trying to press them. I haven't looked at the S&P for a little while here, and that is, they're definitely trying to press them into the low. Let's watch this for a minute while I'm getting this list together. Yeah, I love this sells. I got the SQs, triple Qs on. Short the futures. Loving it. I just want to watch this just for a couple more minutes, folks, and then we'll dig into these stocks. There's quite a few to go through. Yeah, we're about 4 handles off the lows of the day on the futures here. I thought they might try to press them. We'll see what happens. Typically, what we'll get, and as always on these live streams, the last 8-10 minutes, we'll just focus in on this chart. We'll look at level 2. We'll watch them trade into the close. But it looks to me they're trying to press this thing and see if they can print a new low here. We'll just watch it for a minute. Yeah, I've got about 15 stocks. I picked out a list, and we'll definitely go through some of these. And so I'm going to do this because this is most popular. I'm actually going to do gold and silver first because I usually do that. I won't spend a lot of time on them, but enough that we can, because I cover gold every night. So really, there's not much more you're going to get. They're trying to press these futures here. See if they 350 is going to be the number to watch. Here we are at 4 even. They're 350 just like that. Yeah, that's going to be your number. We take out 350, it's new lows. So we're printing 350s right now. 50 prints. Oh, look at that. Boom. They took it out. Yeah, there could be a nice little run here on for some new lows, I think. Looks like we're going to press them. 250 trades. There's some decent bids down here, but they won't matter. These are flash bids, most of them right now. So time for a, oh wow, that's pretty cool. You can't see my Runa. It's time for a Runa commercial, but it won't show up. So we printed 250 here. Typically we'll get a bounce for about a handle or two. They'll try them again. They're not done. I did say that, Benny, that if we close under 34.99, there's at least 2 more days down. I covered early in this session today what my expectations for this ABC, looking at there is going to be support around 33.40, around that level. I will have those numbers on the video tonight. And how do you folks like getting the videos a little earlier? Last week I totally burned the house down, meaning that I pushed it way too hard last week. So I'm changing my targets here. I think, hey Gino, I think I saw you on here. Did you try the Runa? Did you get your Runa shipment? I know you sent me an email that you got it. Yeah, I'll touch on this in a minute. It looks like we're going to hold these prices here. I was thinking we might see a nice run on these lows because we're just above R3 right now on the futures. So I thought we might get an R3 run here. And so we bounced from 250 back to 550 here. We're still within, you can see the market grid on there right now. Yeah. That's funny. Yeah, I do have a decent amount of folks in Europe and around watching for the videos. Tonight's going to be a little tricky because I have to I have to go somewhere after the stream today. It's going to disrupt my afternoon, but I'm definitely getting these things done. It's nice to have some rest. I haven't had that for a while. And I can run on 5-6 hours. I've done that most of my life. So I'm just one of those people that don't need a lot of sleep. So when you get 7, man, that's like 12 to me. All right, this thing's bounced. Definitely not gonna. Let's move on. Let's start getting through these stocks here. All right, we'll stay on. I'm gonna go full screen just so we can see this. And we'll just start. I said we would start with gold and silver. Let's do gold right now. This is monthly. Maybe it seems like an accident that I started here, but maybe not. Let's just blow this up a little bit. So I really haven't talked about this. This is something that goes back 4 months ago when this event happened. I talk to you folks all the time about this RXT sell. Let me point this out because these things are just deadly. I mean, it's amazing, especially even on a 1-minute graph for short-term scalping. That these things are insane. Okay, so what I'm talking about right here on the gold, I think this was July. I can't get to the actual date, but that bar we closed above the RXT, that signaled 2 to 3 bars down, 2 to 3 months down. That's exactly what we've done. And I've talked a lot about this Fibonacci grid that I have on the screen right now, that gold is stuck in this range. And, you know, I started trading gold in a big way in 1980. I've always have had a knack for gold. But one of the things that's happening down below, look at these PPMs. They are right at their probably most extreme. This green line, actually match this so we can have it. These are, this first one, PPM 1, is still up on the left hand side of the screen. These are big numbers. These are 1.84. For those of you who don't know what a PPM is, it's price pressure momentum indicator. It tells you the angle of attack of the moving average. So it tells you when a moving average is going to be a valid trend line, when it's going to be broken, is basically the premise of the PPMs. The other 2 lines on these indicators are first and second derivatives of the primary of that orange line that's in the middle. But this thing is right at a key point where it's about to take its first derivative out. And what that tells us is we're going to move toward the 10-month moving average. And that's this red line here. But it is rising at almost 2% per month. So that's a rising number. I mentioned in last night's video that we could trade down into the 1700 handle. We're seeing a little firmness here because the dollar's weakened a little bit. The dollar, when it comes to trading gold right now, it's all about the dollar right now as far as that goes. There's no way around that. So these minor little movements in the dollar are going to affect this a lot. But anyway, this line here that I'm drawing up, that's going to be what I talk as your demand line. And this is easily going to stay in trend mode, which is anything above 0.25. It's 1.84. So 0.25 is, yeah, that's a number we're not going to see that broken. Otherwise, that 10 period moving average is going to hold. Real quick, we'll move over to weekly. And I covered this every night, so you've seen this. We're sandwiched between the 10-week moving average, the 10-week moving average, and the 21-week moving average. So that is where we've been trading literally for the last 4 weeks. We're a little bit above and below, but you can buy off the 21 and sell the 10, and it's been magic for the most part. And if you put the market grid in there, with it, then that's really easy to get to. So yeah, let me let's flop back over now. Yeah, I just want to look here. Yeah, we're still 5 handles off the lows here. But yeah, so let's go ahead. Let's take a really quick look at silver, and it's the same story. 1021 week. The high this week has been 2571. The 10-week moving average is 2581. Basically traded up to that, and we also had $25.86 was R1 on the grid. So we definitely have seen this, but I've talked a lot about this. It's the same configuration in gold. These massive down moving averages are just telling you this thing's not going to rally anytime soon. Okay, there's weeks to go, and I always tell you folks I'm going to do this, but I'm going to do a video. This is what I call a dragon formation. You never want to buy a dragon. So we want this thing to work out. You can see the dragon head here, but looking at this pattern, that's where we are. Okay, so here we go. Let's start. We'll start on Apple. We're going to dig into these stocks. That's pretty funny, Antonio. I don't think I'm going to grow a mullet. I'm lucky to have hair, but that would maybe I'll get a mullet wig. How funny is that? Anyway, so but this pattern on this is the same pattern. Think about this. Apple is the market. Apple's the market, right? It's one of the primary parts of this market, and it's looks just like the S&P. It looks just like the NASDAQ. It looks like it is because it is those things. So, you know, you're really looking at the same ABC pattern that I've driven on every one of these. And you get it, went a little bit above the RXT for the week. Let me just bring that up. RXT 75.93. Let me get to the right bar. RXT 123.64, 125.39. So we spiked above it. We're back into the grid, and the 10-week moving average 116.73 is going to be the demand line, or the point where you're going to have major support down at that level. And is there any numbers? Yeah, S1 115.39, so a spike under that. So you can literally trade off of that 10-week moving average. And I know I covered this last week. It was the same thing last week. I talked about the 10-week is going to be a magnet. We're just going to be moving either side of the 10-week moving average. So if you're trading and we go over to a daily chart, you'll be able to see exactly what's going on here. Check this out. Here's our RXT sell right here. 2 days down, maybe 3. We'll see. If we get the close, which it looks like we probably will, we get the close below the 34.99 on the S&P or the SPX, then that's going to tell us a couple more days down. I suspect we'll see Apple move down into these moving averages again. Maybe, you know, like I said, 116. If you look at the daily moving averages, we can move down somewhere around maybe 114 is the 21. That would be an extreme. But we're going to stay within this grid. That RXT sell was magic. There was another one, I'm sure, as I bring it over here. This was the one of September 1. I know I went off for, I don't know, a week on this whole situation with Apple. And when they split this stock, they took the largest capitalized company in the planet and quadrupled the amount of supply and stock on the street. It's going down. Okay, that's not that was never a bullish event. I'm just looking through, I guess I'd be guilty of what I accuse some of you of only reading my thumbnails and not actually watching the videos, but the videos out there and how this was going to be the most bullish event and all this stuff. And I had a friend that told me their sister bought the split on Apple. I'm like, oh gosh, they probably just bought the high. And she just looked at me like, really? I thought this was going to be bullish. It's not. So anyway, let's but this pattern on Apple is what it is. Let's go to Tesla. We'll start daily and we'll go, interesting. Tesla's getting, if it stays here, it's going to get an RXT sell signal today. So the magic number 465.85. If you folks get, hang on 1 second. Okay, wow, makes my hair look gray. Very interesting with this white background. Anyway, it's not that gray. But wow, that's weird. But this, matter of fact, it's so weird I'm going off screen. But as we look at this is the market grid for that you can get. You can sign up you have to get the WaveTech research tool, but you've got Tesla on here. Right now, we should be able to start searching the database. We're working on some new stuff here, and you can sign up a free account, get this, but if you go to Market Grid, we can go down and we can go right to Tesla, but you can see where the grid is for all of these stocks. We're actually adding about 22 stocks coming in. And there we go. But you can take in this Tesla here and, what the heck is it? There it is. So if you take Tesla, can you guys see this? Is it washed out? I'm going to highlight these so for sure you'll be able to see them. But yeah, so that, yeah, I don't know, FEPDX. Yeah, the grid numbers are king. They're amazing. I mean, I've been operating since around 1997, 98 is when I developed these things, and they've always been amazing. But yeah, so if we close today's range 456.85, we close above that, that's going to give us an RXT sell. So we're looking at 2 days down on Tesla. I don't know, maybe there's some shorts that you can throw out there, maybe buy some puts or do a spread or something on put spread or something on Tesla, very short term. But the numbers are big that where we can go. But there's quite a few stocks. I think there's 150 stocks on the grid right now. The plan is that we'll have 5,000 stocks, and you'll be able to search and bring up charts, and there's going to be alerts and boxes will highlight it if they've been hit, all that kind of fun stuff. But I want to show you that because if we go back over here, that's what these lines represent. These are the grid numbers. So 456.85 closes above that today. We're going to fall back into the grid. It's fairly narrow. but we would be looking for a range back to at least S1, S2, 444 to 41, maybe going to STX 436. If we go to the weekly, we might see something a little more reviewing. Yeah, so just like that 10-week moving average is the magical number. That's 413. We're looking at maybe those numbers I gave you on a daily. That's what you want to watch. I mean, we're talking about very short-term trade, but this also is a dragon head, and you don't want to. We're going to trade up to the upper end of this, and what we're seeing with the PPMs on a weekly basis is you're seeing this stuff starting to tail off. You're below first and second derivatives. We're still a very robust trend on the upside. So that number right now that I just talked about at 413, that number is going up at about $15 per week. So that number will be 440. Kind of goes right in line with the numbers I talked about on the daily. So I'm going to keep moving down. Probably one of the more popular. What a crazy stock. NEO is just through the roof again. So NEO's trying to get, this is a weekly. Let me go over to daily. Yeah, crazy. So whoever asked that, anybody know what's going on with this stock? If you do, if you could put it in chat, it'd be awesome. Yeah, and Tesla's volatility has faded hugely. And by the way, the contraction of daily volatility range is a negative. Typically what happens when you get that is you're going to see this is important, folks. When you see volatility collapse, that's what, like right here, even on this NEO, it's broken out above. I don't know what, I always try to, I'm going to have to research this stock. It comes up all the time. Yeah, so I guess that's what's going on. $40 by JP Morgan. All right. Well, that's setting up an RXT sell. So if it finishes up here, what will happen with the grid is going to adjust. This is the beauty. There's a section on my channel. It says understanding my analysis, and I've got some things on the PPMs if you want to watch that. I also have some info on using the market grid, and I'm going to update. I'm going to do some follow-ups to some of these videos because they've actually gotten really popular, especially since we started offering the market grid out on 150 symbols right now, and that's expanding. But when you see what will happen is this thing, the grid itself is going to turn up sharply. It has to adjust. So there's a video on my channel that says the difference between Bollinger Bands and the market grid. Now, Bollinger Bands are standard deviation lines. These are volatility or daily range volatility. And that's why you'll notice now some of the stocks, especially like a stock like this that has been bouncing everywhere, they don't get the same, they have slightly different characteristics. But when you get into the broader market where the volatility is a little bit lower, you normally don't see, and even in this case, it's only about 15% of the time will we get these RXT cells. Now this thing, when it exploded over on the left, got 2 RXT cells in a row, and then it went sideways. Most of them will go, it's a sideways to down, and it suggests that we go back into the grid to the lower end of the daily grid range. It's not like that. It can end up to be a major sell signal. As you know, back on 9.2, we got that on the S&P, we got it on Apple, we got that RXT sell at a lot of places. And when it happens, it's significant. Sometimes a short-term signal can trigger over into a larger signal that goes to the next level. And that's something that Well, when we started the infancy of doing multivariant trading, that was what we were trying to do, is to take a short-term signal, migrate it into an intermediate, into a long, and then we found out there were some other things you could do with that thought process that was able to really make a lot more money in the markets. But the point is here is that this thing will adjust, just like you see over here on the left. You see that sharp increase. The same thing's going to happen. This NEO will have this. So if you have the market grid, NEO is in the market grid, so you can see that one as well. Like I said, I think I'm going to update the list. I just don't know if I'm going to be able to get it. I'm hoping to update the list in the next 2 days, and then we should see this thing. That I think there's going to be 170, roughly 170, 175 stocks. All right, so let's move on. These are just some random symbols that I came up. I haven't seen this one for a while, but Chipotle is here. Interesting enough, Chipotle yesterday got RXT sell, and we should see a couple days down. PPMs are still very positive, so you're likely to go back into moving averages, looking at this thing coming back into the bottom end of the range, back toward maybe 1310, 1295 in that range on a short-term basis. So we do have RXT sell. Let's take a look at the weekly. Nothing there, but we are trading at the high 1341, R3 1339. So basically an R3 hit, and we traded right off of that 10 period moving average. And this is going to be a common theme on a lot of these patterns, is that you're going to have that 10 period moving average when it's up at least like 1%. This is up 1.2. You're going to get, that's going to be your demand line, and that's where you're going to trade off of. So the 10 period moving average will continue to be a point to buy off of. 1267. So you just bring up a simple 10. You don't want exponential. You don't want a weighted average on these from this concept. Okay. So next we'll go to Amazon. Amazon traded through the top end of its grid, starting to reverse a little bit. Well, it looks like I'm going to flash over for a second here. Yeah, we're at 86. We've rallied 14 handles off the lows now on the S&P. So we are looking at a pretty decent rally off of that 72 low. This feels like one of those days that's not going to finish that bad to me. Like I said, the thing I'm looking for right now is at 34.99. Yeah, so Alan, is the volatility Tesla a bad thing? No, it's actually a good thing from a trading standpoint and make it easier to trade. But it does usually coincide with some negative numbers, especially when it contracts substantially. All right, looks like they're going to try to recover this just a little bit more. So back to Amazon. Let's go to daily. Now, daily got the RXT sell yesterday, flat to down a little bit, followed through. This is exactly the scenario for this signal, is that you go down to the bottom end of the market grid, which right now is the lows 33.40, 33. Let me bring that on screen so you can see it. 33.38 is STX. We've had a low of 33.40. So we basically satisfied that. We could see this thing turn down tomorrow and see one more low in here. Like I said, I think everything is going to be pending on this. Everything's going to be pending on this close today. Okay. Yeah, as far as Amazon goes, you're also seeing the PPM starting to roll over here. So we're probably going to come back toward this 10, 21, 40 range, 10 and 40 between 57, maybe as low as 50, maybe 57, 56 on the downside. We should see maybe one more day down on Amazon. But this may still be setting up a larger pattern. And that's why when we go back to the weekly for a second here, when we look at that, you've got a lot of ways where you can retrace back. And the same thing, these patterns all look the same. Tesla, Apple, Amazon, all of these guys look the same. A rising 10-period moving average, this one's up 0.63, so a bit over 0.5%. So that's bullish enough to set that up, so we would probably move back. If you did get back to that's a big number, all the way back to what, 3207, but that number is rising about 20 handles, so that's 3227. That's still a long ways from here, but we're definitely have some downside. So next market, let's do Facebook. Facebook, same thing, similar pattern, slightly different, but similar in that we've got this rising 10-period moving average. It's not rising as much, and we could actually, it looks to me that we're going to fall back into that 1021 range of expectation, where we could see the Facebook move back to around the 251, and we end up trading between, if we can close under 267, then we're going to move back in to 251 range and work this grid to the bottom end. And you can see this is a weekly. This goes back, we got a weekly RXT sell in 828, but we got a lot of weekly sells that week. That was right before the 10% decline, but we did get that sell. Take a look at the daily just quickly. Yeah, so RXT sell day before yesterday, 2 days down. We're still working. The grid says 269 is extreme, 270 to 269. So far we've traded between S2, R3 so far. But we are seeing on the PPMs down below, we're seeing PPM1 break through its first derivative, and they're all trying to roll over here. So there's definitely some weakness coming in. Like I said, probably down at about close to $20 from where we are right now. Yeah, I see some people requesting some of these symbols. Peloton, this was already on my list. Peloton continues to grind up. What's interesting, we got an RXT sell, but it's defying gravity. We're still going up here. We got a 2.78 PPM1. This is the daily. and these trends are very strong. We're working the grid here. This thing, it lives in its own world. Let's go to the intermediate real quick here, see if we can find anything. Yeah, so we're trading up toward the high end of the range. This thing just keeps going and going. Everybody's buying bicycles. I thought it was interesting that I saw somebody talk about. I guess the weather is a big thing, depending where you live. You know, we still have our air conditioners on here in Arizona, so some of you probably aren't running your air conditioners. Bear with me 1 second here. Okay. Bear with me 1 second. So the Peloton phenomena continues. Something I haven't run on any of these charts yet, but let's do it. Let's add a not on here. 1 second here. I'm just trying to add like some Fibonacci targets on here. So let me just go in here. I'm telling you, TradeStation is acting up on me today. Yeah, SPX is back at 3,500, folks. This thing is turning around big time. Composites back down. It's making me crazy. I can't see the quotes over here. I have no idea what's going on with this platform. Anyway, yeah, I felt that coming. I want to look back over here for a second here. Yeah, we're back at 91. This thing just keeps grinding up. So we are 20 handles off the lows now. Yeah, I was just feeling like one of those things is just gonna grind up and continue on. Yeah, thanks, Pushpack. Appreciate it. I will take a look at that. Give me just a minute here. So we went from being down a lot to not that much. We printed 72. We're last 92. So we recovered quite a bit back on the futures at 91. On the cash market, we are back at, we're just going to segue over to the markets here for just a minute. So we're back above 3,500. So that 34.99 number is going to be critical. What time we're getting to be? About 45 minutes. Yeah, so be interesting if we closed higher today, and have a big reversal off of that low. Yeah, this is a weekly chart we've got up here right now. Yeah, so I just want to look at what we did on the markets here for a minute. Bear with me. Yeah, Gerald, if Tesla closes under 456, above 4056, you would be looking at a 2 or 3 day sell-off for sure. Okay, we'll keep an eye on this thing as we come into the close here. As I said, we traded just above the 3,500 level. We're starting to fade just a touch. Like I said, 34.99 is going to be the key number here on this one today. Yeah, so I'm flipping back to Apple for a minute. Looks like Apple printed 119.62, 21.40. So pretty much a buck reversal there. It looks like that's probably driving this this rally right now. Yeah, so a couple things on the screen right now. Yeah, just looking at 5-minute Apple. Looks like we got right into the target range on the Fibonacci's on a 5-minute chart. But this looks like it's driving what's going on out there. This line up here at the top is actually a 200 period moving average on a 5-minute. I just wanted to see what was going on here as far as what was driving this market. So let's go ahead and go back to, yeah, it's interesting that Apple got up to very close to its target range at got to expand this window a little bit. Target range 126.84. It got up to 125.18, so it didn't quite hit its target one on this. All right. Let's go back to some stocks here. I'm just going down this random list that you folks gave me. This is interesting. If I can get it right, AIG. This thing looks to be heading toward its 200-day moving average. We're above all the averages. The PPMs are solidly, PPM 1 is at the 0.73. We're trading 29, the 10-day moving average 29.37. So far, the low 29.60. So that's going to be your demand line on a short-term basis. We should see this thing hold in here. And it looks to me that we're, after a couple of days of consolidation, we should see this thing move higher, but let's confirm that by looking at the weekly. Yeah, weekly we got 32.42, so we could probably move up toward this 40-period moving average right now. PPM 1 or 3 is down 1.7. That's going to be substantial amount of resistance. So right now this stock trading range will be, what the grid is showing right now is 27.93, 31.97, which basically could spike a little bit above that into that 32.42 range. But we do have, on an intermediate basis, we're still flat, and this is one of those stocks. I'm going to draw something in, because this, anytime you see this pattern, this is what it's actually suggesting right now. Okay. So this is a pattern that's out there. This looks like the airlines. It looks like a lot of stuff. Somebody said talk about some of the recovery stocks. I would say this looks like them. We can bring up American Airlines. We could bring up a lot of these things. They all look the same way on a weekly basis. In fact, let's just do that. Let's bring up AAL just to show you this pattern. It's very similar, where they rise up into their 40, they come down, and it's interesting, like for American, there's actually right now there's upper end targets 25 to 30 target, and that's something that I've been talking about for a while, is that it looks to me that's what we're going to get. We do have on the WaveTech tool, if I go over to WaveTech and if I bring up my Warren Buffett strategy, this is my Airlines Buffett. If I look at that, I only have one stock long. Let me see what's selling here. I have one order for today. Yeah, selling American today. Interesting. So this was one of the stocks that was long. So it got an order to blow out of American for today. So if we go back to open positions, it turned south yesterday. So we're letting that go. We have JetBlue on. It's not really working. So there's only a couple symbols in here, and if you can see, as we look at this strategy, you look at the summary, we're up right now 82%. So we've given back some money since August. We had some money going. The airlines all flipped around. This was the September 9th reversal, and now we've got one stock on, so we're looking basically at 16% of the money on this strategy working. So it's actually trying to flatten off. There's not willing to take any risk in here. But these patterns, as I go back over here, these patterns all look the same. We can go Delta. Somebody, I don't know a lot of these symbols, like Carnival and things like that. If you guys can give me one of those symbols, that would be awesome. But it was just so we can take a look, and if whoever asked for those symbols, go ahead and give me some of the recovery stock symbols. Yeah, Love, I'm sure looks the same way. And this one looks a little better. This stock didn't work very good because they were upside down on their, okay, yeah, thanks, CCL. Yeah, these are all the basic same patterns, folks. And this is, so the question is, you know, will the next level recovery, these will be the trades. And right here, we've got targets right now. Shoot, hang on one sec. Yeah, so we have a target here, and this is Carnival, right? By the way, I hate boats. So this is Carnival, but what it's telling, this would be the breakout. This green line is the 40-week moving average. Up here is the 200-week moving average, and it is declining over time slightly. But this target range right now, these three numbers you'll find over here on the bottom on the left, 30, 31, 36, 41. So if I were a WaveTech user, I would put this in maybe on a daily and a weekly model and let it tell me when to buy this thing. When the new trends are identified, then I would buy these. I would wait for that signal. I just wouldn't buy them thinking it's going to do this, because there's no signs that it will yet. In fact, the PPMs are down here are telling you not yet. Okay, so that's important, but that pattern that it's recognizing. So there's a couple things in the software that we have. Is it looks at it's looking at the pattern and recognizing that the Fibonacci pattern, and this is the Fibonacci projection up at the top here. So yeah, but all of these stocks, somebody gave me another one here, like Cake. Similar, but it's a little bit ahead of itself relative to the others. Like the airlines aren't getting any traction. Obviously, people are starting to go to Cheesecake Factory again, right? And so we're seeing this pattern, but it's basically the same. If you look over here at down at the bottom on the left here, high target 35, 41, 45, minimum 35.67. And so far we've been, what, 31.85, I think. Here's a 32.10. What was the high over here? 32.63. So it wants to move up into this area between high target 1 and 2, 35 to 41. That looks pretty good. You know, I think this thing is going to continue. Yeah, so we're seeing SPX, by the way, trading, what time is it? 12:30. So another 15 minutes or so, we'll stay on doing individual stocks. And then as we come into the close, we're going to actually focus in on how the markets are looking on close. So I'll do Delta just to show you. Same thing, 10-week moving average is right there, 33.42, but look at the targets. Let me light those up. The target's down 44.51, but most likely the primary target is going to be that 200-week moving average, which is 49.44, falls right in between high target 1 and 2, right in the middle there, actually more slanted toward the 51.65 target. So that's going to be your range, but all of these stocks look the same. And you're going to see there's themes that run through the markets. So if you just look at what I've talked about today, So if you looked at what I've talked about today, we look at the Amazons and the Apples and the Facebooks. They all have that upward sloping 10-period moving average. We go to recovery stocks, whether it's the cakes, the deltas, the airlines, all the different things we've looked at here. They have this same pattern where we're riding right under the 40-period moving average. PPMs are in bottoming formations. So those are going to be the next, those will be the next patterns that we want to watch for. And on an intermediate basis, I've talked a lot about this. I'm just going to flash over for a second over to the platform, to the WaveTech platform here, because I want you to see on a research on an intermediate. Let me go to all stats here. On an intermediate basis, 65%, I love that gray look, 65% of the market is bullish right now. So 65.38% of all the symbols in our database, 10,775, are actually long, and that tells us that there's something else we can look at over on to the right here, is the average holding period for these models, for these trading signals, are 203 days. But if we look specifically at the 3-2 model, it's 221 days, 168 days. But we can actually go over here to the duration fulfilled line. And what we're going to see is that we've only fulfilled 24.5% of the expected returns. So the expected returns right now, average profit is, or the average holding period is 203. We're currently, average days, current duration is 49. So we're only 25% of the holding period. So we have roughly, if we went to full holding period, we have 150 trading days, which is about 6 months duration left in these current signals. The next line to pay attention to is this average standard deviation. I'm sorry, right down here. The average profit is on these symbols is only 10% for this particular I'll get it right. The average profit, this line here, 29.7. So the average signal that we've got out there makes 30% on the stock. Right now, only 10% of that has been realized. So there's still another 20% returns possible on the database. So in the end, what this is really telling us is that we are, what this is really telling us is that we have a lot of duration left. We have a lot of holding period left in the database, and that 65% of stocks, like I always go crazy when people say, oh, there's only 5 stocks driving the market. No, there's not. There's actually, like I just showed you, we have almost 11,000 symbols that are demonstrating some sort of uptrend, and some of them are way outperforming. I built a strategy the other day. Somebody pointed out that the top 20 stocks for the last 20 years have not been tech stocks. Believe it or not, Apple was number 10 out of the top 20 in performance. I think I'll light this up on the other screen. What time we're getting? 35, yeah. Yeah, I built a portfolio on our other platform, and it's interesting because you wouldn't have thought these stocks are the ones that were going to be the big players for the last 20 years. You thought it was all about tech stocks. Well, it actually hasn't been. So I'm bringing up the other platform. It just came up. Let me see if I can locate this strategy here in just a sec. I'll change this look a little bit just so we can see this. But this is a platform. I named this strategy. Software is not eating the world. Okay, which it was an article that I saw, and that was the title of the article. But it shows this goes back to 2010, and this is also using our multivariant dynamic indexing strategy for return. So the S&P during that same time from 2010 to current went 20%. But if I crank this, what I wanted to show you is that what the stocks were. That was more important than anything. Just a second, I'll have to bring that up here real quick. Let me bring this over to this window. So these are the stocks that are in here. I know that they're probably pretty small. I think I can blow these up. But this is not the stocks that you would have thought were going to be the ones. And now these are in 3 times because we're trading them on monthly, daily, weekly. But looking at Activision, right? Ball Corp, Humana. Look at these stocks. Monster Beverage, Altria, Nvidia. That was not a surprise. Old Dominion, which is a trucking company, right? Ross Stores, Tractor Supply. That thing's been a monster stock. But as you look at these stocks, these are not the symbols that you thought would have been. These are not the symbols that you would have thought would have been all the major players. You would have thought to sing Google and Facebook, all those. No, they're not even. Apple was the only one that made, it was number 10 of the 20, which I thought was interesting. So, yeah, I'm just looking here. So what'd you do, Tater? Everybody's getting a kick out of whatever you said. That's funny. Yeah, so retail and transports, exactly. It's very interesting what looking backwards, right? It's very interesting seeing what that looks like. So I was actually shocked, and this chart is actually insane here. This is the performance running our modeling. This is something I'm hoping to get this out to you folks so you can do fractional shares and you can run this multi-variant approach on this. 1 second. So let me show you something here that's interesting, I think. I want to open this up, and I want to go back 20 years just for fun. By running running this process here, this is going back to 2000. Running those 20 stocks, running them in a multivariant, you're up 12,000%. And the little bottom, that line at the bottom, that blue line, is the S&P 500 from 2000. So it's somewhat comical, but those are the 20 biggest stocks running a multivariant direct dynamic indexing strategy. I've got to get this out to you folks. You want this. Okay. Where are we at here? Still, so about 15 minutes out. Let's see if there's anything out there as far as you folks. Yeah, I don't think 3680's an easy one there. I'm not sure how to pronounce your name. I'm terrible. I'm an American. Yeah, I don't think it just goes to 45 then shoots 200 handles up. Not before the election. Just not. And the patterns don't suggest that either. But anything's possible. Yeah, so let's take a look at that. Yeah, I'm planning on holding those SQs into tomorrow, I think. You know, they've done okay. They pulled back quite a bit. We'll see how we close up. But yeah, I think I will. I got them on pretty good, so that's a good thing. But it's all going to be about the close here in a few minutes. I like the P&L an hour or two ago. Better than I do right now, but it's okay. I think I got on the SQs, I think it was 43 on them. 1343, I think. Something like that. Not great, but it's okay. Yeah, let's do, yeah, you know, I don't know, FEPDX, yeah, Apple got S1R1. I actually thought that's what it would do. And we're actually seeing a lot of markets doing S1R1. So let's take a look. Let's put up the index up here for a moment. Let's go to daily. Matter of fact, let's go to a 5 minute on the S&P 97.22, down 14 handles. You know, if they hadn't shown us the this happens a lot from a psychological viewpoint. Yeah, as we come into the close here, let's talk a little bit about this. This happens a lot from a psychological viewpoint, and you have to be careful. And I've talked to you folks before about some of the dangers of discretionary trading. Is the emotions you see the low of the day 34.80, and then you look at last trade 34.98, and if you'd never seen the 34.80, I always ask myself this question: if I hadn't seen 34.80, would I be happy with 34.97? And the answer was yeah, I would have been happy. I was just looking to close under 40, under this 99 number today, so I'm happy with that. So somebody's asking, do you want to hold those shorts? Yeah, I think I will. 96. I think the next few minutes will be interesting to see if the machines come in. We'll go over to level 2 in a minute or so. Yeah, so yeah, so yeah, Jess says it's going to gap up tomorrow. You better get in right now. Yeah, okay. We'll see. We're printing 95. I guess I'm on the other side of that trade with you, Jess. I'll take the other side. That's always the amazing thing, and that these live streams are really cool. And I do this every Wednesday. It'd be great to do this every day if I didn't have anything else to do, but I do. But I do think it's kind of nice because it reminds me of the days back on the trading floor, and you walk around the floor and everybody's got an opinion. You're a trader, right? We're all traders. Everybody sitting here chatting on this live stream today. We're all traders, and that's what we do. So we get to talk some smack once in a while, and that's what makes this stuff fun. Absolutely fun. So let's see. I'm just looking at some of the chat line here. Yeah, we'll tune in. We're actually getting a little selling here. It's 94.77, so we're selling a little bit coming in. This 5-minute graph we got up here right now. Let me take off this. This will look a lot better when I take this off. That'll be a little easier to see. Get that out of the way. We don't need that. So we're trading down toward the 21. So I did something like this the other day. In fact, let's go total. This would be, I think, a fun way to finish off this trade. Is let's just go to a 1-minute chart with the market grid on it, and let's just see what's happening out there. I want you to notice just a little bit ago when we printed up at 3501, we got a RXT sell on a 1-minute graph. That was the signal to that decline. We got another one right here. Went sideways, and now we're just kind of working down in this range. We're trading 94 even right now, 93.61. So you can see the grid if we move down. Let me bring that up so you can see that. Now this thing is relevant to have over here. So it's fun watching a 1 minute because we did this, I think, 2 weeks ago on the NASDAQ, and we're able to figure out a pretty good trade off of this thing. Yeah, just looking at the market in general, dollar's negative, gold's up a bit. Looking at crude oil printing up a little bit. So we've got a general kind of a commodity day. Copper up 14%. Yeah, here we are getting up to the top end of the grid on the 1-minute graph here, 95.61. We're trading just right to it. There we are above it. We're trading above it now. Top end 94, 95, 74, 97 even. So we just went from 94 to 97. So it looks to me we're going to get potential RXT sell signal again. We'll see if it plays out. There it is. We did. So now we should see it print back into 96, 95, 50 level. That's we should see it print back. We'll see what kind of range. We basically have locked this thing down right now. We got what, 9 minutes to go to the close. So we basically have locked this thing down into this range, and we're going to call it right now 94 to 501 to 3501. That was a high print. That's going to be the range. Is probably a touch tighter than that, maybe that 99 number. And what we're looking at on a daily basis, a close under 34.99 is going to tell us that we're going to, here we are trading where I just told you we trade back to 90, 95 or so. Now we're going below the grid. And so this grid is going to, we got the RXT sell, and there you go. Now we got the grid printing down again. R1's 94.46, last 95.01, 94.91. So maybe we see S2, maybe S3 on this on a 1 minute. Moving averages are trying to roll over to the downside as we come in here, trading 95, 28, 29. So yeah, Exxon is a dog for sure. Yeah, it's funny. People used to ask me, what I think about investing. I don't even know what investing is. I'm not sure what that is. To me, when you start to think about long-term investing, I, I can't see that far. I was talking to somebody yesterday on the phone, one of my institutional customers, and we were talking about, just buy it in 3 years from now, it's going to look really good. I don't know how to do that. I've never been that guy. I'm into intermediate. Maybe I'll look at a monthly graph and I'll be able to figure out 3-6 months. I've talked to you folks about this before. The longer term the projection or the prediction, the more likely you will be wrong. So if I tell you this is going to happen in 10 years, I'm probably going to be wrong. Now, some guys have gotten it right, probably watch sci-fi movies and figure out more about what's going to happen in the future than listening to people talk about these longer term projections. They're absolutely, there's so many variables and so many things that change, it's impossible to call. So let's see what we're doing here. We've got 6 minutes to go. Yeah, gold, silver, long term. Yeah, that's okay. I like the monthly. I'm not saying you can't do that. I'm just saying that's not how I view the world. There's so much money to be made in these small, intermediate 6-month, 9-month windows that you don't need to know that. Okay. You could predict something's going to go up 50 or 100%. Well, if you do the right things, you can make that same money doing other things, I guess that's my viewpoint, not necessarily the only thing. Now here we are printing 93.56. The 10-period moving average is down pretty good. See if it holds right here at 94.91. This 1 minute graph. Okay, we're looking at micro. So we got above it, traded up toward the upper end of the grid. 95.71 is the high end of the grid. High 95.39. Actually, just a touch over R3 here. Now it reversed down. So I'm just reading numbers and it's already reversed down. So this is so far so good. We have 5 minutes to go. A lot can happen. Here's 92 prints. So we're printing STX numbers here on a 1 minute. We're through the lows here. We're printing 91.80. So this is what I wanted to see here, to see what kind of conviction on this bounce we're going to get. And so far, not much of one. So we'll see how this goes. Now you see the market grid just adjusted down. Let me go off screen so I can get yeah, so you see market grid just adjusted down. Now we have the 200-minute moving average right here at the 34.89.10. So that's more or less a pivot right now. PPMs are trying to turn up on a 1 minute basis. So we've got 3.5 minutes to go to the close. I do this every time. We want to watch the last 2 minutes and the last 2 minutes of trading and the 2 minutes after the close. Here we are trading it right at 200, 91.52, 200 now is 91.30. So it's rising a little bit. So it's right now supplying some decent support. So 2.5 minutes to go. So we're in that range. We're going to go over to the level 2 just so we can see what's going on there. So 84's trade on the futures. So we'll have to change our numbers a little bit, orientation, but 84.72 low. So we'll see what kind of, if we can get some selling as we come into, we're just about into that final 2-minute window. Probably why that 2-minute window means so much to me is because you used to have a 2-minute bell on the floor. So, you know, you'd get a 2-minute bell, you get a 1-minute bell, and then the final bell. So we'll see how this thing plays out here. $83.75, little bit of selling coming in. We are in that window the last 2 minutes now, and what we want to see here, we're seeing some volatility pick up. You see the activity on the bars. We just traded all the way back to 85, back to 83. So we're going to see everything pick up. The activity is going to get into a frenzy here in the final minute is where you'll see a lot of squaring of trades. And then after the aftermath will tell us if there's any short covering or if there's any additional selling coming in. So these are the institutional mutual fund guys here in the last couple of minutes, trying to balance out their ETFs and the mutual funds and all that. We print 81s, so definitely some selling into the close here. 80s print. So we're definitely seeing that some pretty heavy selling. All of a sudden, we pushed well off of that 3,500 rally that we had. And right, by the way, we got at 3501 is where we got that RXT sell on a 1-minute graph, a 20 handle move. So here we printed 79.25. Final minute of trading. Yeah, get some decent selling coming in here. And yeah, 9 even. What's the low print here? Okay, that's the party. That was it. So we printed as low as 78 on that little spike. Now we're trading 80. So we'll spend another minute or two. We'll hang out for a few minutes. I've got to head out of here pretty soon. So I'm definitely going to be $79.50, so not a lot of activity. So what we're seeing is stability in the aftermath. We're entering into the second minute. Well, I'll come back on screen. We'll chat about some final things that need to be talking. Yeah, someone said that volume spiked real high at the close, and that was definitely all of that activity that I was talking about here. Let's flip over and just. Yeah, interesting enough though, even though volume spiked, there's your 1-minute volume spike. There it is on the close that we were just talking about. Yeah, I guess fee PDX, yeah. The RXD does work on a 1-minute and 5, etc. You just saw it work real time just a minute ago. The thing's a deadly signal. I've been using it for day trading for 12 years probably. Yeah, I think we see a retracement for sure. But yeah, so you can see that spike on the close. Very, very interesting. But when we flip this over to a daily, we actually saw volume down today. Okay, volume down. Oh, it's still running. So down basically even. So we did not see a spike in volume, which is good. Now I have a different viewpoint on the world when it comes to volume. I look at volume much different than most folks. Like you can see on this day over here on 9/18, I believe that was around the bottom. We got a volume spike. You get a climactic volume spike. When you see when volume goes down, let's say, okay, I'm going to rewind. Markets are trending. I don't care if it's up or down. If they're going up on low volume, that means they're going to continue to go up until you see a climactic spike where it finally puts out the high, and then you see volume just spike up. That's the high. More volume doesn't mean more higher prices. It's you want any rally that you want to have, you want it to go on low volume. And so we'll do one last little educational piece at the end here is most people think volume drives the markets. It does not. Quick illustration, I've been doing this forever. I've got 1 million shares to buy, you've got 1 million to sell, and it's half bid 5/8. And I go half bid, and you finally, and the last trade is half. And I go half bid, I'll buy 1 million. And you go sell 1 million at a half. So we did 1 million shares and the price didn't change. A lot of stock changed hands, but prices didn't change. But another scenario, this is how prices move, is if it's half bid 5/8 and you're just going, I got 100 to sell, and I'm going, I got 500 to buy, and you're like 100. So I go 5/8 bid. It's just like playing poker, right? You raise it. So you go, so the guy goes 5/8. You go take your 5/8, raise it, 500 bid at 5/8. And the guy goes 3/4. Take your 3/4, 3/4 bid for 500. And that it's the aggressiveness of the buyer or the seller that makes prices move, not volume itself. It ends up if you get one of these, so you see these days where the market's going up and go, oh, volume wasn't that high. So I've always said, when people tell me, well, it wasn't a valid price movement because volume was low, and I'm thinking, the day they tell me I can't keep the money I made because of low volume, I'll pay attention to that. Until then, forget it. That's what's going on. So you have the mechanics of this market, folks, haven't changed. Nothing's changed. You know, I know. Listen, I started on Chicago Board of Trade when I was 27 years old. Okay, so you know, I've been there. I remember being the 30-something-year-old guy nobody wanted to listen to. So you know, so you have to actually do your homework and understand how the mechanics of the markets work. You can't do this stuff if you don't understand it. And there's a lot of bullshit out on the internet. You guys know that. But anyway, I so appreciate, I love these things. I think we're probably around 1,000. We got 866. Really enjoy doing these things. You know, don't forget to support the channel. Obviously, you can super chat, but what we'd like you to do is actually sign up for the WaveTech platform. And the point of having a WaveTech platform is support the channel, but you also get signals. Now you get the market grid. We are posting, I should be able to announce after the close today, we now have screens. So we're doing fundamental screening for you folks, helping you to select stocks on a fundamental basis. And we're going to be developing some stuff around that. And you have the WaveTech platform, 16,500 symbols. Sign up. It's $3.12 a day. Okay. We got some really cool stuff coming. And by supporting the channel and doing this, this is really going to make a big difference. And, you know, we've got some really cool stuff that I want to do. So it's on the screen. You can go to kendallreport.com, WaveTech, and you can sign up. It walks you through the whole process. you get the grid, you get the whole bit, and all that kind of stuff. So so anyway, I had to do it. Hey, at least I did the advertisement at the end, you know. So Geomatic, thank man, appreciate it. Um, yeah, tell us how I feel about Buffett and Dalio. Listen, it there's going to be some new out of this next era. I'm just going to say this. Been doing this a long time. What's happening in the investment arena right now, in my opinion, is a renaissance of sorts. A lot of you folks that are younger. I know a couple people on here that are actually around my age that I've had the opportunity to meet or at least chat with via text or otherwise. But you know, this is a new deal coming. I've been talking about this internally with a lot of people. Fractional shares, no cost trading, automation. I mean, we're working on some cool machine language stuff and things that can learn not only from what the models are doing, but from what your activity it will be within the models. Knowing the type of thing, just like going to Amazon, right? Say, oh, you looked at stuff like this. We have some other ideas like this. Would you like to see them? And that kind of stuff. There's some way cool stuff, but you do it by supporting the channel, by signing up, by doing those things. And you know, I spend quite a few hours online with you folks, and I really appreciate that. And Michael Dove, yep. My favorite name to be called is Uncle Bob. I got some great nephews and nieces. It's awesome. Thank you. Some people even call me Grandpa, and I am a grandpa, so that works too. So anyway, but you know, it's believe it or not, it's been a real honor to do this channel. It really is exciting to do this stuff because I see a different world. I've hung out in the institutional world for the better part of my 40 years. I've only ventured into retail back in 1990 and it was way too hard to get any visibility back in those days. So, you know, we're going to work on it. I'd like to see this channel with 100,000 subscribers. So tell your friends, if you haven't subscribed, make sure you do. You know, we still got 800 people hanging around. So, you know, let's do this together. There's some really good content. There's some good tools here. It's not snake oil. It's the real deal. And, you know, we're really, you know, I'm very sincere about what I do here. You know, this is, I take money serious. And I always have. So anyway, but thanks so much for watching. So I'm going to go ahead and sign out. I really think it. Make sure you hit the like button because YouTube likes those like buttons so they know that you like what I'm doing here. So I appreciate everybody watching today. It was a pretty good session. Yeah, I'm hoping I'm going to try to reach out to Kathy Wood. I really want to meet her. I think we'd have a great conversation. Anyway, folks, thanks for watching. I really appreciate it. And thanks for all the super chats and subscribers to the channel, everybody. Thanks again for watching. Thanks again.